Okay, welcome everybody. We're back again, another week, top 10 funding opportunities, but tonight we're going to have a little bit of a tweak. This is going to be the top 10 funding questions for financial growth. I am with your hosts, CB Wentling and Heather Dreves. We're going to be walking you through some of the questions that are asked by our lenders, and we're actually joined this evening by a very special guest. And we'll get to him here in a second, Mr. Terry McIntyre. So my name is C.B. Wentling. I'm the Director of Funding here at Secured Investment Corp. Little background on myself for those of you folks watching, as well as those of you on the webinar. And we're also live streaming as well. I have 12 years of mortgage and finance and private lending experience. I've been with Secured Investment Corp now for the better part of 2.5, almost 3 years. Originally, my background, I got a bachelor's degree and played football at the University of Hawaii. And for finance, I've managed portfolios in excess of $35 million, as well as funding lines in excess of $100 million. My lovely co-host here, Heather Dreves, I'll let her introduce herself. Go ahead, Heather.
Good evening, folks. Thank you for joining us tonight. My name is Heather Dreves. I am the Director of Funding, also here at Secured Investment Corp. And I also have been in the industry for multiple years. In addition to that, I've managed multi-million-dollar lines of credit and also sold off of those lines of credits to one-off lenders like yourself. In addition to that, I am a licensed Series 63 agent, and that's about all.
Well, that's not all. That's actually awesome. And I wanted to introduce for everyone at home and all you folks, we are very privileged this evening to have in our studio Mr. Terry McIntyre. Terry McIntyre is our senior underwriter as well as our special guest. And I tell you what, he brings a lot to the table. He has decades of mortgage and consumer lending experience. He's implemented credit policy as well as underwriting procedures for all the companies that he's worked for, international and domestic credit evaluations, accounts receivable, collection management. He's literally worked in all aspects of mortgage in the mortgage industry, from processing, loan origination, all the way through underwriting. So Terry, tell us a little bit more about yourself. Welcome, and tell us a little bit more about yourself.
Thanks, CB. I'm glad to be here with you and Heather this evening. And pretty much ever since I got out of college, my life has been real estate. I love it. It's going on almost 2 decades now, which is fantastic. I've owned real estate, I've sold real estate, I've developed real estate, I've lent on real estate, pretty much everything. And it is my passion, and hopefully I'll be able to give everybody a good insight on how I feel about it tonight.
Great, excellent. Yeah, and that leads us right into why work with Secured Investment Corp. For those of you that have joined us on the webinar before, for those of you that have seen this, first of all, we help investors build strong portfolios. We have a proven track record of success. And what we're able to do is take our investors and plug them into a turnkey process that allows us to create a very powerful community of borrowers and lenders that benefit each other. Again, all the files that we offer from our company, if it's not a win-win situation, you simply will not see it. So what's in it for you, the lender? Anytime I've ever lent my own money, as well as lent the money of others, that's the common question that always comes up. What's in it for me? One thing we do is we help investors achieve high yield returns by offering them deals where they can earn in excess of 8 to 12% annually. They get to also choose the deal at their own comfort level. Heather, what else are some of the benefits of working with that's in it for the lender?
One of the big things that I feel pretty strongly about is that we don't put any deals out there in front of lenders that aren't already pre-underwritten by Terry. These are all deals that meet our guidelines, and loans that Terry feels have a great possibility to make it to the finish line. So these are all pre-underwritten loans. The other thing I feel pretty strongly about is you get full transparency. We give you everything that Terry, as the underwriter, reviews to make your decision whether you want to fund the deal. So you basically control the parameters of your investment. If you like the deal and it makes sense to you, you fund it. If you don't, we find you something else.
Absolutely. Couldn't agree more. You know, why private money lending? For those of you that are investors, a lot of you folks that are tuning in and a lot of you on this webinar, you might be fixers and flippers. You could be lenders already in your own market, so you already are aware of the benefits of private money lending. It's a passive investment. It doesn't require tenants and toilets. You don't even have to turn a wrench. You merely plug your money in, and what it does is it allows you to receive an ongoing residual income over the life of that loan. You're always in first trust deed position, and we're going to get more into that later in our webinar this evening in our simulcast. We only lend on properties up to 65% loan to value. And to talk a little bit more about what's required of the borrowers in regards to skin in the game, go ahead and take it away, Heather.
You know, skin in the game is something that I feel pretty strongly about, and I know everybody else does here. There are several forms that skin in the game can come in. It can be cash. You know, it may be a purchase transaction, the borrower is bringing in some cash to the transaction. It can be an equity. You know, we have a lot of borrowers, as Terry can attest, that come to us and have properties that they currently own that they want to borrow against to acquire other properties or rehab other properties that they have. So there's several different forms of it, but I think we all agree that skin in the game is a pretty big factor.
Absolutely. And again, I want to remind everyone, and for all of you listening and for all of you watching, I would like to let you know that this is interactive and we're more than welcome to answer questions. You're going to get an open book tonight, which is Terry McIntyre, our senior underwriter. He is going to be able to answer your questions. So what we're going to do now is we're going to go to those questions. But I also want to put up our contact information for you viewers on our webinar, that Heather and I's email addresses, that you can also write into us about any further information, and we're going to call you to action at the end of this show, and we're going to ask for that you write to us with any further information needed. And again, I want to welcome all the new attendees, and let's get rocking and rolling. Terry McIntyre, what is the #1 goal of underwriting a loan?
Well, CB, it's pretty simple. When I came here to Secured Investment Corp, I wanted to make sure that, #1, the investors and the lenders were protected. That has to be my #1 goal. I am the last fail-safe that gives the confidence to the people that are trusting us with their investment that we are going to get them the best return and utilize their funds to the best of our ability by giving them the best product to be able to invest in.
Wow, okay. Oh, go ahead. I'm sorry.
That's all right.
Hey, we're already jumping all over each other. Love it. Can't wait to ask the next question.
Terry, how confident do you feel in Secured Investment Corp's model and the underwriting process currently?
You know, this question kind of hits home for me, everybody. I myself, I helped develop all the underwriting guidelines and the processes that we have, and I feel so secure and confident that I have stepped up and decided to put my own money basically where my mouth is. And I have personally invested over $150,000 in first deed trusts that I have out right now. And so when I can back it, I'm pretty confident that it's going to work. I don't like to lose money.
How are your loans performing for you?
Every one of them has performed perfectly so far.
Well, that's great.
Great.
Yeah, we do have a great loss mitigation department here, and I tell you what, I cannot give enough kudos to them, and absolutely. So there you go, straight from the horse's mouth. What tool do you use to achieve the goal of underwriting?
Well, CB, Heather, we have developed a systematic process that we use and a foolproof underwriting guideline system that I follow, where I analyze everything from the applicant and the borrower to the property and every situation that could possibly go bad to keep down in the loss mitigation as much as possible. I can't be perfect, but boy, I sure try.
Great. One question that I'd like to ask you that a lot of my lenders ask is, what do you look for in an applicant?
That's a good question. As people know, hopefully, we only lend to business entities. By doing that, we keep the possible foreclosure process down to a minimum. So we need to make sure that the applicant has a viable LLC or corporation, land trust, some type of business entity. We can't go to the individual borrower. And also that there's somebody putting a personal guarantee backing that business and or the entity that is going to be the main applicant.
What assurances do I have that these borrowers or entities, and some of the lenders, and it's a common question that I'm always asked by my lenders, is what assurances do I have that the borrower can service this debt? What tools do we use for that?
Absolutely. The most important thing, and hopefully the biggest success, is we want everybody's loan to perform. So we take a hard look at, does the borrower have reserves that they can be able to make these payments? If we're not turning the money around for the investors and helping them utilize it in a secondary process, then we're not doing our job. So we look at what kind of history do they have in real estate? Do they have rental income coming in? Is the property tenant occupied? Does it cash flow? Does it have the ability to cash flow if something does happen and the tenant needs to be put in there really quickly? And of course the biggest thing, do they have a little bit of reserve sitting in their bank account? We'd love to make sure that there's a little bit of payment sitting there. So if, worst case scenario, we still make sure our investors are protected and can somehow get a payment from our borrowers.
Great. Before I ask my next question, I don't know if CB mentioned this, but for you folks out there, if you do have questions, please start sending them in, because we will address your questions in addition to these top 10 that we're going over right now. But one of the other things a lot of my lenders ask is, what secures my money and how is it secured?
Absolutely. CB had it on one of his slides up before, but our number one security is your first deed of trust. What that means is we are guaranteeing that through a title policy, which I'll touch on in a little bit, that the investor is protected by being in first position on a deed of trust. So nobody can come and encumber the property or have something slide in front. You're guaranteed that you're going to be the owner if anything happens, and that your money is backed by a valuable asset.
Great. I got a great question here online. Again, I want this to be interactive. I got a great question coming in from Rashawn. What is the minimal investment requirement? Now that could be a twofold question. What is our minimum loan amount, or what is the minimum requirement from a lender? Like what size trust deeds do we do, Terry? I mean,
Well,
hey, let us know.
We pretty much do as much as everything. But that being said, we do have to limit it. Our minimum loan amount is $15,000. But when we go to that small loan amount, we really mitigate the loss and make sure that there is enough room, that there is still room to play if there needs to be a foreclosure process or so forth in place. As for minimum investment, I guess I'll kind of turn that around to you guys. I mean, I'm not sure what do you guys like to see coming from your investors and lenders?
Well, there is no minimum, but they do have to fund the loan 100%. We do not sell any fractional interest in our notes. So,
yeah, I would echo what Heather has to say, but I would also add that the smallest deed of trust that we have funded since the company's inception is $8,600. That's a small first trust deed for first trust deed position lending. We don't have a cap, and like Heather says, we don't have a minimum, but it has to make sense to the borrower. I'm going to echo what I said earlier. It has to be a win-win situation. There's closing costs, there's interest rates, there's title insurance, there are costs associated with the loan, and at the end of the day, the borrower has to exhibit that they're going to make money in this transaction to make it worth their while. And so when they sell us on that, and that's what we teach our sales staff, then we're going to provide it to you. So yeah, that's a great question, Terry. I echo what Heather says, which ties into, what everybody, a new investor or someone sitting at home, if you've never invested in trust deeds or you don't know anything about this, they are, well, how do we know what that property's worth? What do we do? How do we know what the property is worth? Tell us a little bit more about that, Terry.
Well, when we first started this, we had to decide how we were going to analyze the value of properties. There's many different ways out in the industry that people can look. You hear acronyms of people thrown out of CMA, BPO, but forget about all those. It's pretty simple. For us to be able to protect the lender to our fullest ability, what we have done is we require a third-party, unbiased appraisal done from a national appraisal company to make sure that there is no fingers or no relationship between giving the value to the transaction and the borrower or the seller, to make sure nobody can benefit outside of that appraiser. By doing that, those appraisers are all licensed. We make sure that they have insurances, and any errors or omissions or anything, we can go back to the national company and we can get fixed. By doing that, there are hands-on in the field. We have to make sure that we can trust somebody's opinion on a property, because pictures are only pictures. We can't go out and look at every property firsthand, so we have to trust somebody, and so we make sure that it is a licensed third-party professional.
And in these property evaluations, don't the appraisers typically, I mean, they have notes in there and they do speak to the condition and any deferred maintenance on these properties. And I have a question right here from one of our viewers, and Brad asks, do you lend against the purchase price or the appraised value?
Well, Brad, I'll address the appraised value first. You have what the property could be worth, and then you have what the property is as an as-is value. When we talk about taking an appraisal, we go with as-is value. What's it worth right now, right here, right this time? That being said, we take a lower of a purchase price of 80% or 65% of the as-is value, whichever is lower. So you're never going to be exposed at more than 65 cents on the dollar of the value of the property.
So just to clarify, we do not accept appraisals from brokers or borrowers that are provided to us.
Correct. We want to make sure that no broker, no borrower, no real estate agent, nobody has their hands in the transaction or can give us their opinion of value. We take it from an unbiased third-party person.
Great. Well, I think that takes us to our next question. I know that we deal with a lot of properties that need to be rehabbed, and I have a lot of lenders ask, what is the process if a property is uninhabitable or in need of extensive rehab? How do we control that?
It's a very good question, Heather. When I look at the appraisals, the appraisers will tell me pretty much everything, what is missing and what isn't in the property. The number one thing that I look for, that I want to make sure I'm protecting our investors and our loan at Secured Investment Corp, is, can the property be habitable? Can it be occupied? Currently, yes or no, and can it be rehab to get an occupancy? By taking a look at that, if a property is uninhabitable, we want to make sure that it's being brought up to standards to make sure that, worst case scenario, a renter can be put in there during a foreclosure process, so at least the property is cash flowing for the investor while they're going through a foreclosure process if things go bad. That being said, rehab, we listen to what the appraiser says. They're the ones that are going to be the first ones to look at the property. If the appraiser notes that it is uninhabitable and cannot be occupied at the time, then we require professional contractors, we require multiple bids to go out, at least 2, and give us an estimate of every piece of work and the scope of work of what needs to be done to that property to make it habitable again, so we can have an occupant in there. One of the things we check as soon as we see if it is uninhabitable, we go right to the title report. Has the title company, has the property been condemned? We make sure that the occupancy permit in the local jurisdiction can be accessed as well.
Wow, you know what, guys, and for everyone that's new to this, I hope you understand that, sometimes this is very technical stuff, and Terry is absolutely, he is the best, and I've worked with Terry for over 10 years. So if you have any further questions on this, I'm going to also inspire you guys, write more questions, keep them coming in, but I'm also going to say too, at the essence of it, we put those funds in rehab in a nutshell, and we're going to help you as the lender control them through a draw process. And at times, if Terry thinks that the bid is, when he's reviewing it, doesn't quite cut the mustard. We have impounded in escrow, again, so if you fund a $100,000 loan, we will impound $20,000 or $30,000 for the rehab. Even if the rehab says 20 grand, we could escrow as much as $25,000, $26,000 to make sure that that's more than covered. Now, if the borrower does it for less, we return the funds to the borrower, or they can put it back into the loan as principal reduction. But what we want to make sure is covered. If that property is uninhabitable, that the project gets complete. Because at the end of the day, nobody wants to have to foreclose on a property that can't be lived in. So just like Terry said, that's a very, very good point, and we do deal with a lot of rehabs. I'm not necessarily in a position to give statistics, but you know, the other one is how. One question is how do I know that my money is secure? One of the questions that come in is how. Sorry about that. Where is it? What secures my money, and how is it secure? Sorry, I got fat fingered on the slide, so I'm gonna apologize. Everyone at home, I'm looking at a camera and I'm hitting the slides at the same time.
Sure, sure. Well, I touched base a little bit on the first deed of trust. So the lenders are always going to be in first position. But some of the other things that we do is we look at title insurance. And what that means is every loan is insured through a title policy to make sure that a research and a history has been done, that there are no liens or encumbrances, back taxes owed, so forth on the property. So when an investor lends to our borrowers, they are getting 100% free and clear property at that point in time that nobody can take from them. We also require the borrower must pay at least 12 months of insurance, hazard insurance, fire, flood, so forth, whatever pops up. That has to be paid in advance at closing. So our lenders are guaranteed if something happens to that property, they are listed as first loss payee and will always be paid back first on anything that happens on an insurance policy.
Great. Are they on the title policy also?
Yes, they are.
Once they commit?
Yes, the
Are
lender.
Are they on the deed as well in the note?
Yes, the lender is always on the deed and the title policy. As the first person. Secured Investment Corp does not have any position on the property. It is all the lender and where they want and where they sit. The only thing that Secured Investment Corp has an additional interest in is on the insurance policy, and the only reason we take that position is so if something happened, the borrower cancels their insurance or the insurance company cancels, we are also notified right away, and we can contact the insurance agent and get that fixed immediately. And so we list ourselves as an additional insured on that for that purpose.
Do you have a company, an insurance company that you work with that takes care of force-placed insurance?
Yes, we do. If a borrower cancels their insurance for some odd reason, a lot of times it's to try to get a little bit of extra cash back after closing or so forth. We immediately go to an insurance company and force place insurance, so the lender is always protected immediately as soon as we are notified to make sure that if anything happened to that property, the lender is going to get paid first.
Good.
Now, I just want to interject a little bit or talk a little bit more about when we talk about title policies and the vesting and all that stuff can be really technical. What happens, and I've had this question asked of me, and I just think that all the viewers and everyone on this line, what happens if the title company gets it wrong? Because we've had instances where the title and escrow company, now we only work through national companies, but sometimes they miss a tax lien, or they miss a mechanic's lien,
Sure.
or they miss something. But this is prior to us closing the loan. And so it pops up when they go to reconvey, or that borrower comes back and says, hey, I'm looking to pay off your loan in 3-6 months or whatever, and something pops up that was previous to our transaction. How does the title company, how does that get remedied, Terry?
Well, the title policy is actually a title insurance policy. So it's an insurance policy to the lender as well. And it is something that the borrower is forced to pay for the lender, and the title insurance company, if something pops back up and something happens, the title insurance company, it's a claim on their insurance policy. They have to pay out that claim, whether it be curing back taxes that are owed that they didn't report, or a lien that gets recorded and they didn't see the recording, anything like that. The title company has to cure that because they have insured that policy.
Great, thank you. I had a question here from Gary online, one of our viewers, and it was, and this applies to the appraisals, does Secured Investment Corp do ARV rehab lending? And ARV usually, and for those of you that don't know what ARV is, for everyone at home, that's after rehab or after repair value, and I've even heard some people call it ARV. But do we do that?
CB, we don't. And the reason, it's plain and simple. Again, I'm here to protect our loans and our lenders and our investors. We want to make sure that we are not overextending our exposure by hypothetically lending on a hypothetical value. And that's pretty much what an ARV is. After repaired value. And if the property is what it is, then that's what we lend on. We don't give anybody any benefit of what they possibly could do to bring it up to a price level. It's always as is, what is it worth right now, that's what we lend on.
Okay.
Yes, this takes it back to the rehab, and you may have already touched on this. A lot of my lenders ask how we ensure funds for rehab are available and used on the project.
When it comes to rehab and repair, we want to make sure that the property can be habitable if anything happens. So we immediately put all of the funds into a third-party escrow account that is only controlled by me, by my department, underwriting. And a borrower cannot access those funds until they can prove that work has been completed. Some ways they can do that is photos, video, and we can also, and I've had, the property has been rehabbed so extensively and is so different that I couldn't even tell it was the same property. I've asked the appraiser to go back out there and make sure and everything has been completed to the work standards that we needed. And those are good situations when I can't recognize the property when it comes back. But
yeah, those have all been good situations. I want to add that. Yeah.
That being said, though, we always build in a contingency. Number one goal is to make sure that the work is going to be completed and that the investors' money is going to be protected. So what we do is we build in a contingency of at least 20%. Now, there are some compensating factors a borrower can gain and get less than that, but our standard is a 20% more than 100% of what the bid comes in. So for an example, if it's a $10,000 bid, I'm putting $12,000 in escrow and I'm keeping $2,000 for contingency that work is going to get absolutely completed to the standards that we need it to be done.
Good. Anytime we lend money and we talk about this, just like we say, what's in it for us, the lender, how do I get paid back? How does that work? I mean, we do the loan and you're saying, hey, this borrower in Hartford, Connecticut needs $100,000. I'm going to loan $100,000. How do I get it back?
That's the number one question, obviously. Getting the money back and getting it cycled, giving the investor their highest return on their money. First of all, we always look at, can the borrower service the debt? Obviously, it's great if the borrower doesn't go full term, because the quicker we can turn investors' money, the higher return they're going to get. So we take a look at, does the borrower have experience in flipping that house? Can that house be sold if anything does go wrong very quickly for more than what is owed on the property? So we have that. Second of all, we have a servicing company that service all of our loan. After closing, in my department, we call the borrowers, we remind them when their payments are due, how much their payments are. We turn them over to the service company. The service company calls and welcomes them, reiterates the same thing, and we make sure that those payments get paid on a timely basis to make sure everybody makes their money. Thirdly, if something does go wrong, the biggest thing, one of the things I look for is, can the property cash flow if we have a tenant in there, worst case scenario right away. If we can get a tenant in there to where a tenant is paying a possible investor more money in rent than what the borrower just defaulted on their payment, then it's a kind of a win-win. We help the investor pay for a possible foreclosure and help them through that foreclosure process, but make sure that we can rent that property for more than what is invested into it.
Absolutely, yeah. The cash flow is key, especially. I mean, these are all investment properties.
Absolutely.
I agree. We are getting a lot of questions online. I want to remind everyone to keep those coming in. I also want to skip through this. If you want to have any additional information sent to you, this is my email address, CB Wentling, Director of Funding. My email is cwentling@securedinvestmentcorp.com. We have a lot of deliverables. We can also do, we have an overview of our underwriting guidelines, as well as our 15 steps to the lending process. If you'd like those, also Heather Dreves, you can write to her as well, and it's hdreves@securedinvestmentcorp.com. I wanted to throw that out there. But now we're going to go online to some of our questions, and this is where we're going to open up the phone lines, or well, in this case, the webinar lines. And let's see here. I have a question from, do you lend, nope, we already answered that, sorry. What different ways, this is a question more in regards to lenders, what are the different ways that lenders, and so Heather, you might be able to answer this, or Terry, what different ways can lenders invest? What different types of funds do we use to invest in these properties? What are some of the different ways that they can fund loans?
That's a good question. I actually had this come up just the other day from a lender on the phone who thought that the only way that he could fund a deal was through a self-directed IRA. So there's multiple ways. I have lenders that have liquid funds that fund deals, and in addition to that, a lot of them have self-directed IRA funds. They have multiple self-directed IRA accounts that we can work with. I know CB and myself work with, I don't know how many different self-directed IRA companies.
7 or 8.
Right.
The main component of that is that whatever self-directed status, whether it's a 401k, an employee profit sharing program, your individual trust fund, we work with trust accounts, we work with RIAs as well as independent investors, fund managers, all types of different investors. The key is that if you're in a self-directed status, that the company that you're with, you can invest in first trust deeds or mortgages or notes. That is key, because you can have a self-directed IRA or you can have a self-directed account with a lot of companies, but the company might say you only have to invest in their groups of funds. Well, that may or may not include first trust deed investing. And so that is critical of the custodian that you're working with. You ask that question. We can give recommendations. We're not on here to recommend who we work with. We have a top 5, but I'm here to tell you that we work very well with all the companies. The main question is for you, or for you, the lender, is can the company that you're working with allow you to invest in trust deeds? Now, if they can't and you need to roll over, you can contact us. We'd be more than happy to give you 2 or 3 examples of some phenomenal companies that we work with that offer the very best in customer service and the best bang for your buck. That is very critical. That is an excellent question. I have another question here. Harold asks, are loans available for construction, for construction or rehab of small apartment complexes between 10 and 25 units? Terry McIntyre.
Well, yes, they are. And the extensiveness of the rehab or the construction is going to tell us a lot about what we can do. What we need, obviously, are the basics. Is we need contractor bids. We need to know the scope of the work and what we're getting at, and of course, what we can lend on, the as-is value. So we can do the construction and we can do the rehab. Again, everything gets put into escrow. We are a, I guess you could say, last out lender. We want to make sure that our money is being used last to make sure that the property is 100% occupiable when we get done with the project.
Okay. We have a question here. Any one of us can answer, but we have a viewer. We have a property under contract, and we're looking for lenders for the purpose of acquiring and rehabbing these properties, what private lenders do you recommend? Hey, you're tuned into the best and the greatest. Secured Investment Corp. Contact us. We're your answer. We have sales staff on hand ready to assist you. We have Terry ready to underwrite your file. And Heather and I would be more than happy to work with our pool of investors who are not only on this webinar, but also work with us in other different capacities to get your loan and your project funded for you. So definitely reach out, send us an email, and we'll get you in touch with the right professional. Great question. But yeah, you're doing the right steps. You're on the webinar. This is another one. This involves foreclosures. What is the process what process do we have when someone defaults on a loan? What's our process?
It's a very good question, and it's more directed to servicing than underwriting, but I'll try to touch base on it the best I can. Obviously, once you go into default and on a deed of trust, which are very, very boring to read, they'll put you to sleep at night. It goes through the parameters of when a borrower officially goes into default. We have a very short grace period, so default can happen very quickly. And the reason for that is we want to make sure that if a borrower is going to default, a foreclosure process can be started quickly and efficiently so that the lender and the investor can get as much money back as quickly as possible. So that being said, it does depend on a state-by-state basis. Every state has different foreclosure laws, so it's really hard for me to touch base on exactly what we're talking about a time frame. But that being said, we do lend to business entities, so you're never going to run into a problem with the foreclosure process where somebody says, I did this as an owner-occupied loan. You can't remove me from my primary residence. We make sure through all of our documentation and through the underwriting process that this is non-owner occupied, and that being said, that gets around that particular parameter so somebody cannot squat and dwell in the house on an investor.
Okay.
What do you do in the case of if you do find on a file that it is owner occupied and someone is trying to commit fraud? What steps does underwriting take?
It's pretty simple. We have a zero tolerance policy for fraud or for owner occupancy. If it appears to be owner occupied or that there's any fraud going on, the file is immediately suspended, the borrower is immediately put on a blacklist, and we are done dealing with that borrower because, again, it all comes back. We make sure that our investors and our lenders are protected, and we cannot expose that risk to the people that help us out.
That's good to
Absolutely,
know.
absolutely. This is again, when we talked about debts and servicing and going into defaults and things like that. We have a question here from one of the folks online. Do you require monthly payments, or can you pay off all the interest when you pay off your loan?
Yes, the borrower is required to make a monthly payment. We do a simple interest calculation, and that simple interest calculation is due on a monthly basis. So it's not a per diem, per day basis. It is a single payment due every first of the month, and for how long the term of the loan is. And so we do collect the payments. They are required to go through the servicing company, make the payments directly to the servicing company, and that gets distributed out to the investor and the lender once the money is received.
Okay.
Do they have the ability to pay off the note early without being penalized?
Yes, they do. And we actually encourage that. And as an investor and a lender myself, I would highly prefer that. The quicker that I can turn the money and get into another loan and get the upfront points and not have to carry a loan a long term on a contract, the higher the rate of return on my investment I'm getting. So yes, our whole model is we really like to see people who fix and flip and sell these properties on a very quick basis. So we keep our terms very short, less than 24 months. We really like to see 6 and 12, but we will go up to the 24 if somebody absolutely needs it and the file warrants going to 24 months.
Good.
a great question. Jerome asks, can I or anyone borrow against their retirement pensions if they're retired?
That's a good question. It all depends on the retirement portfolio. Each retirement portfolio has different rules and regulations, so you really have to talk to whoever.
And the answer that I'll also add to that is that the answer to your question is here. There are lending entities out there that will do that. We only invest, or excuse me, pardon me, that we only lend against real improved property. So it has to be real improved property. So that if you have a pension plan, you would need to roll that over if you wanted to lend into a self-directed status to then implement on a trust deed. If you were looking to borrow against that, you would have to look to another entity, because what we lend against is investment, real improved property for commercial use or investment use. So that is a great question, and we do actually get that a lot, where folks want to collateralize their pension. And that's, it's not like J.G. Wentworth, we don't do that. But that is a great question. Keep them coming. Are our loans always interest-only payments, Terry?
Yes.
Okay.
Yes, and we don't escrow taxes or insurance. We make sure that the insurance is paid up front, and the taxes are paid when we go to closing. So our payments are always interest-only. Again, our goal is not only to make our investors and lenders make money, but our borrowers make money as well. It's got to be a win-win situation, as CB related to earlier. If our borrowers aren't making money and our investors aren't making money, then we really don't have a place in the marketplace. So that's our whole goal, is to make sure that we give the borrower every opportunity to make money, as well as the investor making money as the borrower is making money.
Sometimes I get this question from my lenders, and I'm almost certain that some of the folks on this webinar are thinking it, going back into assets. You know, we are an asset-based lender. We want the borrower to be successful, to be in that win-win situation. What different types of assets do we look at from the borrower? What do they provide us in order to show that they have enough to get it done?
It can come in many forms. Obviously, one of the biggest key parts of our application is a schedule of real estate owned. Does the borrower have other real estate that can possibly be collateralized to help their lending position, and can liquidate if something goes bad with their transaction with us? We also look at bank accounts. Pretty simple. If it's liquid money, then it's going to be used to back the situation, the loan. Thirdly, we do look at IRAs, retirement accounts, and so forth, because that's also always a reserve basis, and hopefully, if all fails, somebody would honor their debt and take their money out of those areas and put it into paying off the loan. If a borrower comes in and does not meet our minimum reserve requirements, again, that is a minimum of at least 3 months liquid that they can make a payment out of their accounts, then we will put money into escrow for the life of the loan to make sure that our investor is protected. So that being said, for instance, if somebody's payment was $500 a month and they did not have a rolling $1,500 balance in an account that they showed us at that time, what we would do is we would take that money, put it in escrow, and hold it for the life of the loan. And then if the borrower defaulted, that money immediately gets released directly to the investor and the lender as a direct principal reduction immediately.
Great. Thanks. One question I have here is, and it goes back into servicing, so I guess I'm going to open it up to the floor.
Sure.
But would the lender service the mortgage, or will the lender set the loan? Will the lender credit all payments or hold payments or to create foreclosures? Does the lender do any of this? Talk about this. Does the lender set the terms? Does the lender hold payments and then still set foreclosures? Either you or Heather can speak a little bit to that.
Go ahead, Heather.
Well, I'm a little unclear as to the question where they asked, will the lender credit all payments and not hold on to the payments to create foreclosures? I'm not.
Well, the question comes from Henry, and Henry, I'm here to
I'm
tell
on
you
one
that
sheet.
if you're dealing with this, you're dealing with a very shisty person. So, no. We set it up with again, everything is third party. Secured Investment Corp never touches the lender's money. It always goes to a third party independent escrow service that acts as a funder. So all of our lenders wire funds to the same place. We have no affiliation. They work with us, so it's always on the backbone of the network. Your funds always travel, whether they're from your checking or savings account to from your self-directed IRA or from your business account. They go to a national escrow servicing company, and it travels through the Fed. That way there's always wiring numbers attached to it. We can track every penny, every minute, that there's nothing unaccounted for. That being said, once the closing occurs and the payments are set up, we work with two national servicing companies that, again, are third-party servicing companies, and they service the payments. They're bound by the rules of the note and the escrow, and our escrow instructions clearly do not state withhold payments for the purpose of foreclosure. And I want to reiterate again, and I can't say it enough, that here at our company, we do not loan to own. We want that win-win opportunity. We also want to underwrite to create that if the borrower does screw up, that you are the lender, you as the lender are protected, that you will get 100% of your funds back, and that we've taken every process and every system to mitigate that to the fullest. And again, I'm going to apologize to anybody. There's borrowers I know that you're watching and I know that you're listening that deal with this, and so that's not the case here. Good question. I'm sorry that I read it verbatim, and I apologize.
That's okay.
I knew where he was going with it. I thought it was a great question. We needed to get it out. Daria asked, what is the website where you can see funding opportunities? That's a great question. I actually just had it up. I wanted somebody to requested our contact information. Heather, do you want to talk about the Premier Investor Club?
Sure. This is a website that we've created pretty recently, and we currently are putting all of our funding opportunities on this site. You can go and review them. You can also request a loan summary on any of them, providing that you have a non-disclosure form on file with us. And at this time, you would need to request the loan summary through CB or myself, but we will be eventually updating the site where you can actually download that information. That is not currently in place, but yeah, that is the site. You can see pictures, general information on the loan on there, and we do have more extensive packages on these that you can review if you are interested.
But you have to write Heather or I.
Right.
This going back to Rashawn. Rashawn has a great question here pertaining to the purchase and rehab of a loan. And do the borrowers have to come up with a minimum percentage, or do they have to have a minimum percentage of profit in order to be after the resale to even be considered as a viable deal?
Good question, and no, but we want to see that there is the ability to make profit. We're not in the business to tell somebody how much money they can or can't make. We just want to make sure that our investors and our lenders are protected so that there is value to the property and value to the deal from both sides, because we want to lower that propensity of the borrower walking away if they miscalculate and there isn't that profit. So there is no minimum, but we want to make sure that the deal is a good deal, and our loan officers and our lending professionals, they will go and walk a borrower hand in hand, and we'll make sure that that deal is good before it ever gets to me in underwriting. So I do not underwrite to a percentage of profitability.
Okay. Here's another question. Gary asks, if I lend money on a cross-collateral deal with a borrower and they sell one of the property, do all the funds come back to me, the lender, or does the borrower get some of the funds? Can they make a profit on a deal?
Good question, Gary. If a loan is cross-collateralized, the loan is going to have to be paid off first. That being said, if it's a large sum towards that principal balance, we can go back to the investor and ask the investor if they feel secure with the collateral that is remaining to release the other property. But on a normal basis, we want to make sure that the loan is paid off in full before we release properties. So on a normal situation, no, we won't release a partial property unless it is extenuating circumstances and the investor or lender is very comfortable with it.
I have a question here from Jerome. And then somebody asked a question right over the top of Jerome. Let me. If loans are interest only, then how does the borrower pay off the loan? Or is the interest only, is this transactional or is it for a specified amount of time? Do you want to take that or?
Sure.
Okay.
All of our loans are short term, so we do 24 months or less. The whole purpose of our lending and from peer to peer, in other words, private investors lending to private borrowers, is that the loan is going to be transferred and serviced quickly. The majority of our borrowers are people that are in real estate to make a living on fixing and flipping properties, or purchasing a property and they need the property to season, which means they own it for 6-12 months to qualify for conventional or commercial lending where they can put it into their portfolio and actually get bank financing at the end. We are more of a bridge gap lender in that situation where we're just trying to help a borrower that can't go to a bank to get money or has a great deal and has found a house that they can fix and flip it for a very low amount of money but a high percentage of profitability. So our loans, we do want to see them paid off very quickly.
That just tells you how important a viable exit strategy is.
Yes, exit strategy, how the borrower is going to get out of the loan is very critical. The interest only portion of that, the reason we do interest only is because we won't lend on more than 65 cents on the dollar to begin with. So we're collateralized. We don't need a principal reduction with every payment, especially being so short term.
Absolutely. And what about in the event of, what are the two exit strategies? Really, what are two exit strategies that borrowers implement that come to us? What are the two main ones?
Sure, I kind of touched base on those, the last question. One is obviously they are fixing and flipping. So they fix the property up, they sell it to somebody, and they immediately pay off the loan, go and purchase another one with another property with their profit. The second one is they refinance into a conventional or a traditional banking product, and by refinancing in there, again, the loan is paid off. So those are our two main viable exit strategies
We have
like to see.
We have another question here from one of our viewers. When a deal, if we're dealing with refinancing on existing property loans and the borrower doesn't have strong financials or credit, do you consider requesting a co-signer or someone with good credit or good financials to help with the refinancing?
It's a good question. Our business model is we are not a credit-based lender. That being said, it can be used as a compensating factor, but it's not a main factor on how we make our decision. We are what they call an asset-based lending. So as long as the collateral holds the value, the individual borrower, we know they might have some issues or have low reserves or have had a trouble past, especially in the real estate market, unfortunately, where it's been over the last 4 to 6 years. But we take that into account, and as long as they have the asset of the property and can be well collateralized, we will take that risk on that loan as long as it's a win-win situation.
This question is for Heather. This is in regards to a potential lender or a new lender. If a potential investor has cold feet or they're nervous or they're new to this and they don't want to understand it further and just wants to be protected, do they have the opportunity to come to your physical location and sit down with you about the investment and be advised on this investment and how, what's best for them?
Yeah, No, that's a great question, and I don't know, CB can probably attest to this. I have a lot of lenders that come into my office. I I mainly deal with local lenders, but I'm broadening my horizons lately, and you know, our doors are always open. I have lenders that'll come in and sit and look at a file with me, and you know, we're here to walk you through the process. We don't want you lending on anything that you're not 100% comfortable with. And if the deal doesn't make sense to you, we find you something else. I can't tell you how many times I've sat with lenders and we've looked at 5 different deals. So no, our door is always open. We'd love to have lenders and borrowers, for that matter, stop by and visit us. So.
But I would also like to add, though, too, is that, you know, our physical location is always open. We are located, our national headquarters, as well as Heather and I and Terry, are in North Idaho. We're right next door to Washington, near Spokane, Washington. We're in Coeur d'Alene, Idaho. So that could be a distance for some of you folks on here. But we do everything by phone, fax, email, and our files are very extensive. Our project summaries are very in-depth. Terry has worked in conjunction with our IT department to create something called a Z Drive. And you can notice this by going to our Premier Investor Club. That is just a one-page summary or a glimpse. There is a complete, fully underwritten, fully transparent file that backs up, and it's compartmentalized everything that we looked at. And in order to be able to view these files, you, the lender, have to have a non-disclosure agreement on file with us prior to us being able to send you this information. So we send this to you and we review it with you. And again, like we said, you control the parameters of your investment. You also get full transparency and access to any file. And again, I'm going to echo 100 times over what Heather said. We don't want anyone investing any money where they're not 100% comfortable with the process, the people, the borrower, the investment. And I want to qualify it as we're not accountants, we're not financial advisors, we are private money lenders, and we are the directors of funding. We're putting an opportunity in front of you because it's been fully vetted by over 100 years of real estate experience in our office, and we're saying this is a good loan. And so that's a powerful statement. And so that's what we put in front of you. But we don't want any lender lending on a file until they're 100% comfortable with not only the process but also the borrower. That is a great question.
But to answer your question, yes, you are welcome to come in.
And you are, yes, you are. Yes, you are. But I mean, if you want to pay for a plane ticket, hey.
Coeur d'Alene's a nice place to visit.
It is. It's a great resort town. And we has an Insider Wealth Summit coming up.
And even the underwriter's accessible as well, yeah. Which a lot of places you'll never have that opportunity.
Let's see here. Can I do these loans on multifamilies under 20 units?
Yes.
Yes, we answered that.
Yeah, we not only do we do residential, but we also do commercial real estate as well. So that would fall in that category. That's not a problem.
Can I make monthly interest payment or monthly payments towards my principal if I choose?
Absolutely. We encourage it.
Next question. Do you make loans to the Virgin Islands?
Ooh, that's a very good question. Our borrower criteria is you must have a valid U.S.-based business entity. The guarantors do not have to be U.S. residences. You can be a foreign national and still be able to borrow through a U.S.-based entity. The actual entity, though, does have to be established in the United States.
Okay, another question. This is coming from a borrower. Underwriting. I have 3 deals and I'm paying full price. The seller is carrying a 35% second on all 3 transactions. The seller's also offered to pay closing costs, so I don't really have a lot of skin in the game. So will you still lend me 65% on this loan?
It's a good question. This one's a little bit specific, so there's got to be a little bit more information that I need on the file to say yes or no. But it does fit our parameters as long as the second mortgage, the person in second position, is viable and our investor is still going to be protected in that first lien position. But we will take a look at the whole entire deal. It isn't something that we will say no to, but it is something we have to look at a little bit further to make sure that it is a win-win.
Yeah, and the U.S. Virgin Islands are part of the U.S. However, up to this point, we haven't. If you can find a deal in the U.S. Virgin Islands, bring it in and we'll take it to our lender committee. We'd be more than happy to review it for no other reason than I guarantee you those are really cool pictures. And we all wish we were there because North Idaho right now, we got snow. That's great. And thank you for everyone who owns a map who's given us we're getting a whole bunch of, that's funny. The rest of these questions, a lot of these folks, I know that we literally have over 100 questions on our webinar this evening, and I want to wrap things up here. So, Terry, is there anything that you would like to add in regards to our underwriting guidelines? I mean, we had a lot of really pointed questions. I think we covered everything from A to Z. Folks, we are, for those of you that wrote in questions, we will be able to follow you. If we didn't answer your question specifically, or for you folks at home, if we didn't answer your question specifically, you can write into Heather or I, and we will answer your question again. So again, I'm going to post up our contact information, so you can write into us, and we'd be more than happy to answer your questions further. But Terry, go ahead. Is there anything you'd like to wrap up with?
The only thing I can say is we're not going to put a deal that we don't feel is a win-win good deal out there for everybody. Our number one goal, again, is to protect the investors and protect the lenders to keep our business going. And if the borrower's making money and the lenders are making money, then everybody is happy, and that is our number one goal.
Absolutely. Heather?
Great. No, I love the clarification we've gotten on some of these questions. I know that I get asked these quite often throughout my day, so it's nice to hear Terry's point of view on these. And you know, for all of you lenders that are out there, if there are questions that we didn't get to or that you thought of after the fact, please get a hold of either CV or myself, and we'd love to address those.
Absolutely, and I just want to, again, there's a lot of, I'm seeing some of the questions coming through from my lenders as well as Heather's lenders and some new investors. And for you folks, literally, we have an open door policy. No question is too crazy. I mean, we've looked at some ridiculous deals, and we still do go through them, and we ask questions, and we arrive at either, yes, we can move forward, or I'm sorry, this isn't a project for our lenders. But I'm going to encourage everyone that if you have a deal, if you have a property under contract, you can send it in, and our sales staff will view it. If you have funding questions, if you have investment funds that you would like to look at first trust deed investing, you can contact us. If you have pointed questions for Terry, Terry is a very busy person, as we have a very extensive pipeline of loans that our sales staff has provided to us, so his time is very limited. So Heather and I are going to act as gatekeepers on that. So again, you really should feel like you're getting to view Oz, and we literally pulled him out from behind the curtain. And so, Terry, I can't thank you enough. And Secured Investment Corp, we're so happy that you're here. And thank you again. I know how much you enjoy being on camera, and so and being on this webinar. So I cannot thank you enough for coming out and answering the questions. And I want to thank everyone at home for asking their questions. And we're all in this together, and it has to be win-win. I am going to say goodnight. We are going to tune out, and I want to. My call to action is this: for everyone on this call, if you are a lender, if you want more information about lending, I would like you to email Heather and I, or either one, request a non-disclosure agreement. We did have a quick question about, is there a buyback agreement? Yes, there is a buyback agreement option available on all of our loans, but you gotta request it from us to find out more information about it. And we also have 15 steps to lending that we can also send to you as well, along with some other great information. So I'm going to ask you right now, please write to us, send us your email. We will get this information out to you in the next 24 hours, and we would be more than happy to work with you one-on-one to help you through this process. I want to thank you, and have a wonderful evening.